Hi, welcome to Small Cap Power Discussion. I'm Jim Gordon. Joining us today is Thom Calandra. He is a American journalist and author. He's also a stock investor. He is the guy behind ThomCalandra.com and also Calandra Reports. He is also one of the co-founders of MarketWatch, which went on to become CBS MarketWatch. We're going to get into that. But first, Thom, welcome to the Small Cap Power Discussion.
Good to be back with you, Jim.
Let's, the last time you and I talked, and we mentioned before we went on air about how quickly time flies, it was about 3 years ago when you and I first met and did our first interview. Let's talk a bit about something you have to talk about all the time, because you were there at the very beginning back in the mid-90s when you and your team saw something on that information superhighway and decided we're going to launch MarketWatch. Let's talk a bit about the beginnings of that and what you guys saw, prophetic insight, I'll call it, what you saw and how it began.
Well, Jim, there were more or less three of us, and this was 1995, 1996, and the company that we were starting to get involved with, Data Broadcasting Corporation, had a data feed that went everywhere, and it was that stock ticker that you see underneath the, you know, the television, the CNN, the FNN at the time, which they also owned, and you know, the idea was there were no free delayed quotes at the time. Hard to believe. Now there are free quotes, free real-time quotes. But back then there were none. I was working in London at Bloomberg, and my former editor, Larry Kramer, who was starting to get involved also with Data Broadcasting Corporation, called and said, hey, you know, maybe we should attach a news product to this. We did. The internet was there. It was good timing. This was in California, and we put it in 8 years, and it was a lot of fun. And we sold it to Dow Jones in, I don't know, 2004 for about $520 million US.
Talk a bit about the landscape too. You and I again were talking before we went on the air about you have been through. How many economic falls, how many booms, how many busts? Talk a bit about being on the front line for so many decades and seeing all of this, say, since the 90s, just that little period alone.
Well, what's happened is that we've seen real-time data and real-time reporting accelerate. You know, in the mid-90s, you know, we thought real-time was, you know, like that evening's news. And in fact, we were doing a lot of television. I was the talking head. You know, I'd be on there with whoever, Dan Rather, or local broadcasters around the country, mostly with CBS, also in London with the EFT, Financial Times. But this accelerated and accelerated. And now, of course, even 3 seconds ago is too short. And sometimes it can create problems. You know, I know it created problems for me. I had a regulatory tussle with the SEC, and I solved it and settled, and I was glad that I did. It was the best thing that ever happened to me in my professional life.
Certainly.
But I just wonder now where it's all going. You know, boom, 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 boom. We see it in the markets. Jim, we're seeing it, of course, with the laboratory stocks, but I think we're seeing it with the resource stocks too. And other segments. It's like because of the access to capital now, because of the speed of trading, because you have these stock slices and these Robin Hoods that allow people to trade in fractions, things get faster and faster and faster. Volumes have increased exponentially, and people make mistakes. People also make a lot of money, and I've made a lot of money in the past 3 months. 4 months especially, and not just in the laboratory stocks, but in the mining stocks. Still, once they turn, they turn. And I would just have to offer as a kind advice to all of us, Jim, you, me, our friends at Small Cap Power, our friends at the Calandra Report, never look a gift horse in the mouth. If the other day we were, well, this was quite a score for us, but you know, we were in one diagnostics company. It went from $1.30 to $8 in one day on, I don't know, 52 million shares in one day. 52 million shares traded. So that was a very good day for me, and I managed to, harvest profits. I know many people did, but some didn't. They're looking for more, and now it's back at, I don't know, it's still higher, and I think it's going to go higher again. But now it's back at 3. So.
You touch on something, and I've seen you talk about this before in other interviews, where this is your wheelhouse, you're on the front line. But you've talked about the average investor who can be inundated, and as you said, Tom, this is not just Dan Rather at 6:30 at night each night; it's nonstop. Talk a bit about what you have before about the average investor and how they can guide themselves through. I heard you say something along the lines of, if you're into iron ore, there's 3 companies, but if you look at other companies, you can be overwhelmed. Talk about the average investor and how you help them.
Well, at the Calandra Report, we follow maybe 20 natural resource companies, maybe 3 or 4 laboratory stocks, and 1 or 2 media companies, and 1 or 2 closed-end funds that have done very, very well. I own, I would say, 75% of them as well. I think the key is, in every single industry, I don't care what we're talking about, whether it's metallurgical coal or whether it's data software, when there's a success, all of a sudden, there are 5 or 10 or 20 doppelgangers. A doppelganger is like a lookalike. In resources, we call it closeology.
Right.
Nothing wrong with closeology when the markets are going up. I have plenty of things in Quebec that are real exploration companies that are really doing things not just with technology, but with their field work that's finding tremendous gold deposits. So if there's a closeology idea that's legit and the people behind it, it could make sense. But I think that's only good in a rising market or in a market that's suited to you. I'm a short seller. I'm not a short seller, but it's easy to get distracted. And I really, sometimes you have to put the blinders on. Pretend you're at the Travers in Saratoga and you're watching the race and you're watching and you really like the horse with the blinders on. That's right. Good. So, I sometimes break my own rules by saying, oh, gee, you know what? Maybe we should look at this company. Maybe we should look at that company. And my overall blanket, Jim, that I throw on this, having made every mistake in the book, I have the, how can I say, latitude, because folks know who I am, of finding out who people are, vetting them. I won't invest in anything now unless I know the principles for years and years and years.
Right.
I won't invest in anything unless I've been to the property or the laboratory. Of course, that's been a little difficult these past 4 months. Not all investors have the time to do that. I understand that. It's easy to get distracted, and that's how people lose money.
I think that's a great note to go out on, Thomas. We've been talking with Thomas Calandra. He is the man behind the Calandra Report, ThomCalandra.com. We should say ThomCalandra.com, ThomCalandra.com. He's also, of course, a stock investor, journalist, author. He does it all. Tom, we're going to just mention one last thing before we go. I know you've written a lot. You read a lot, obviously. You have just written a novel. Hopefully, we'll see it next year, called Grays in Gothic. Is that true?
Yeah, my sister and I, Stevie, who's a TV producer, and I have done Graves in Gothic. It's a 3-part novel. First part's complete. We've submitted it to a number of agents. And we think it's going to be, it's not a young adult book, but I think young adults can read it. It's about an orphanage and for boys in Gravesend, Brooklyn. Gravesend, where we grew up.
Yeah.
The first community settled in Brooklyn, and it was originally Dutch. Of course, now Brooklyn now isn't the Brooklyn of the 70s that we're evoking in you know, in this novel. Anyway, Gravesend Gothic, and thank you for asking about that, Jim.
You're quite welcome. Listen, we'll hopefully look for that next year, three-parter. And anytime I hear things that is going after a demo of young people, I like that because young people should be reading. So excellent. Thomas Calandra, thank you for joining us here on our small cap power discussion.
Thank you, Jim.